please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Welcome back. Well, back home on the last trade yesterday, it was a range-bound day of trade and the market ended with just about slim losses. The Nifty ended below that 10,750 mark and the Sensex too breached that 35,500 mark. The Nifty PSU Bank underperformed with the index losing 2% in trade. Mid-caps too shed more than 100 points in trade. Manglam joins in to tell us what we can expect for today. Manglam.
Well, Ekta, yesterday was International Day of Yoga, and for the largest part of yesterday's trading session, the Nifty and the Sensex were in Shavasana. After that, they woke up in the last hours, so we saw a mild cut after a by and large range-bound trade. So the Nifty Sensex ending lower by about 1/3%, like you pointed out. The Nifty Bank, that one was the one which was more volatile. In fact, ended about 200 points off highs, purely in my reading on account of the weekly options expiry. So the Nifty Bank underperformed after outperforming for the larger part of yesterday's trading session. The mid-cap index too underperformed, 3 stocks in the red for 1 in the green. But that's the kind of month it has been. In June so far, the Nifty and Sensex, they've been absolutely flat. On the one hand, held up by Reliance, as well as Nifty Bank, Nifty mid-caps and the Nifty small-caps have been under a fair amount of pressure. The small-cap index has actually lost about 5%. What has been the star of this month definitely has been the pharmaceutical stocks. In a month where the Nifty is absolutely flat, the pharmaceutical index is up about 12%. So now as we move into the expiry week, looks like it's going to be all about technical levels, primarily because if you take a look at yesterday's high, 10,810, that's where we saw some bit of sell-off, and then we came off and saw some support at the 20-day moving average, which was also the low point of the day. Maximum port open interest is at the 10,700 mark. Let's see whether these levels are taken care of or not, given the SGX Nifty indicating some weakness. We'll watch out for the oil marketing companies. Yesterday, they recovered in trade in the last hour ahead of the OPEC meet. So watch out for Brent and NYMEX as well. Right now, ranging between the $73 to $75 per barrel over the last few trading sessions. The flows, FII is bought after a very long time, but then again, this is just flattered to deceive because most of this purchase was on account of the Adani Ports bulk deal, where the promoters sold about 1,850 crores. Expiry next week, FII is our net short. Let's see how this goes. The 10,800 and 10,700 strikes are most active. Weakness in the global markets continue. The CBOE VIX was up 15% yesterday. SGX Nifty indicates a start around that 10,700 mark. Let's see which way it moves.
Okay, and stocks?
Watch out for the BSE Oil and Gas Index ahead of the crucial OPEC meet weekend. A series of the meetings are already underway, so I will watch out for that. Tata Motors, that stock could be in focus today because it's the first JLR investor day today, but the company's new CFO, P. Balaji, who was ex-HUL CFO, will meet investors, will outline the plan to meet that 8 to 10% EBIT margin guidance. So that is something we'll be watching out for. HCL Technologies has signed a 5-year deal with Nokia for IT infrastructure as well as application services contract. To need to know the contours of this deal, Stride Shasun, another approval, this one from WHO the company's got a WHO pre-qualification for one of their drugs. Future Lifestyle, well, they've approved an issuance of close to 40 lakh shares to Spectacular Investments via a preferential issue, so watch out for that. JSW Steel proposes investment of close to $500 million for upgrading their steel manufacturing unit at Ohio in USA. And from the F&O space, keep an eye out on CG Power. It enters F&O ban after moving up for the last 2 trading sessions. Brokerages were bullish on that stock. And Jet Airways, after being in the F&O ban for the largest part of the series, now it has come out of the F&O ban ahead of expiry.
Okay, all right, Manglam. Thanks very much for that. So we're going to take a break now, but up next, more news and cues. Welcome back. Well, on to the big development in the NSE co-location case. SEBI Chairman Ajay Tyagi has said that the market regulator has received the investigation report in the NSE co-location case. Addressing the media after a SEBI board meet, the SEBI chief added that the regulator has initiated enforcement action in the case. Yash Jain filed this report.
Well, SEBI Chairman Ajay Tyagi offered very crucial comments on three important cases. The first one being the NSE co-location case, the second one being the WhatsApp leak case of unpublished price-sensitive information, and third one was the case of leak of list of stocks which were identified under the ASM or the additional surveillance mechanism category. Starting with the first one, the NSE co-location case, market regulator SEBI Chairman Ajay Tyagi very categorically stated that they have all the reports which were required, be it from the forensic auditors which were EY and Deloitte, as well as the internal technical committee, and now the market regulator is all set to push enforcement action against individuals as well as institution of course being the National Stock Exchange. Speaking about the second case, which is the WhatsApp leak case of UPSI or the unpublished price sensitive information, here SEBI Chairman Ajay Tyagi has stated that on the direction of SEBI, 4 companies, namely Axis Bank, Tata Motors, Bata as well as HDFC Bank, have submitted their internal report with this particular case, and now market regulator will investigate further in all these 4 reports to really find out whether the norms and the regulations with respect to insider trading were violated by any means. Of course, the investigation here is still ongoing. The third one is the list, the leak of the list of stocks identified under ASM or additional surveillance mechanism. Just like the WhatsApp leak case, market regulator SEBI stated that they are from their end investigating in this particular case as well as to how this particular list of stocks which were identified under the ASM category was really leaked.
Okay, all right, Yash, thanks very much for that. Well, moving on, as directed by the Allahabad High Court, Finance Ministry held a meeting with power producers and other stakeholders. The meeting was called to discuss the impact of Reserve Bank of India's Feb 12th circular on the power space. Sources say the ministry is expected to firm up its view on the matter after one more meeting. Anshu Sharma has details.
Banking Secretary Rajiv Kumar met all stakeholders, which included representation from RBI, power producers, coal, power and petroleum ministry on the recent Allahabad High Court order which stayed RBI circular of February 12th, which had instructed resolution of non-performing assets even after a day's default to pay its debt. RBI official present at the meeting maintained that power companies can still restructure the loans as per the RBI circular. Even the banking secretary said that government will see what steps can be taken under the given policy framework of IBC, Insolvency and Bankruptcy Code and RBI circular. He also stated that all stakeholders are open to submit their suggestions by Monday. In the meeting, REC's proposal of Parivartan to create an asset management company was also discussed. Meanwhile, the private power producers highlighted that the issues of power sector's NPA is mostly because of external factors like non-availability of coal, power purchase agreement and delay in payments by the DISCOMs. Hence, the power sector will require a differential resolution to the stress in the sector. They also say that the relaxations would provide a window for chalking out a time-bound action plan for regulatory and policy requirement to salvage the significant portion of power portfolio. So we'll have to wait and watch what decision Banking Secretary will take when the matter is heard in Allahabad High Court again.
Welcome back. Tata Motors is holding its first JLR Investor Day today. Sonia is here to tell us what we can expect. Sonia, morning.
Hi, good morning. Yes, it is the first Jaguar Land Rover Investor Day in a very, very long time. In fact, this is being held at the Castle Bromwich plant in UK, and this will be a platform where investors, stakeholders of Jaguar Land Rover, of Tata Motors, can meet all the JLR heads, and this has not happened in a long time. So the street believes that, you know, the company is sort of increasing their disclosures. They are giving more data to the analyst fraternity, etc. They have outlined a medium-term margin guidance of 8 to 10% for the Jaguar Land Rover business. They will perhaps detail how they plan to achieve that guidance as well. A lot of talk about cost cutting, about their electric vehicle foray will also be discussed, and all these initiatives are taken by the new CFO P. Balaji, who recently joined on, way back in November. They did undertake the first India Investor Day as well. which happened in the first week of June, and now the Jaguar Land Rover Investor Day. So it would be interesting to see what the takeaways from this are. It will largely be the structure of the business and how they plan to sort of increase their capital allocation, prudence, etc. Most of it is known, but just the fact that they are allowing investors and stakeholders to meet various heads, etc., indicates increased shareholder disclosure. Back to you.
Absolutely, Sonia. Thanks a lot for that. We will watch out for Tata Motors as well as Tata Motors DVR in trade today, and we'll get you the takeaways from the analyst meet after that happens. With that, let's move on to a CNBC TV18 exclusive. I caught up with the recently appointed CEO of VIP Industries, Sudeep Ghosh, to get an insight into the company's business plans and future revenue as well as profit targets. Here's a slice of that conversation. Let's talk about the statement that you issued when you were elevated to become the CEO of the company. You said that you'll work with renewed focus and dedication to improve earnings and take VIP to the next level. What does one mean when one says the next level? What is the next level for you?
VIP as an organization has been very, very stable in the mid segment of the market. So any range from 3,000 to 6,000, we've been very, very strong. We have almost 70 to 75% market share in that. But the price points above 6,000 and price points below 3,000 is something that we are not been strong. Below 3,000 has always been the unorganized players, and above 6,000 has always been Samsonite. So this year and couple of years from now, we would like to get that segment into our fold. That would help us to be a complete dominant player in all segments of luggage in this country. And that is what I meant to take this organization to the next level, because we are as it is number one luggage brand in the country. We want to be number one luggage brand in every segment in this country.
So basically, when Mr. Piramal earlier spoke with us after the fourth quarter numbers, he said VIP is like the Maruti of the luggage industry. Your aim is to make VIP not only the Maruti, the Nano and the Mercedes of the luggage industry.
Absolutely.
Well.
Absolutely.
All right, fair point. So let's put numbers to that. You did revenues of close to around 1,400 crores in the last fiscal. 18-19% CAGR over the next 3 years would take it to 2,000 crores by 2020. Is that a possibility?
Yes. That's definitely a possibility, and something that I think could be achieved.
The company has seen a net profit CAGR of 30-32%, and he sees no reason why this won't continue into the next 4 or 5 years. If that happens, your net profit from 128, 129 crores goes up all the way up to 500 crores in the next 5 years. Is that an achievable target, or is that an aspirational target, or is that unrealistic?
As I said, if the sales go up, the profits go up. That's as simple formula as that. So there is, we can definitely achieve the percentages that our chairman said. The whole segment that we are targeting, which is above 6,000, is a segment that we have never operated. We have launched something called the Carlton Edge, wherein we have started selling products which starts at 12,000 and ends at 45,000. Those are high volume, high value products for us. The moment we do start doing volume in that, immediately the EBITDA starts looking better for us. And I think it is absolutely achievable, and I don't see any reason why we should not.
In that case, what happens to your margins?
Actually, the margins are on pressure a little bit because when the dollar is getting stronger and the rupee getting weaker. As I said, the only advantage that we have is now people have started paying money for the products. Okay. So price increases will happen, but the advantage is people do not cringe to pay money for a good luggage, and therefore we will protect our margin through price increases and through finding ways of manufacturing products where the costs will be under control.
So 8% is the price hike that you roughly took all of last year across tranches. Is that kind of quantum expected in this year as well?
Yes, could be between 5 to 8%. That's something that we definitely plan to take, and could be a little more also, because depending upon how the dollar behaves.
All right, so in that case, where does competition come in? Because at the lower end, you have Safari, which is relentlessly competing in that segment. At the higher end, you said there are the Samsonites of the world. Middle level also, I mean, there has been the relaunch of American Tourister. Will you be able to take the 5 to 8% hike as well as hold on to your market share?
I've never felt the competitive pressure when it comes to price hike. Our distribution is very, very strong. Our brands are very strong. I think Samsonite is #1 in everywhere else in the world except for India. We control almost 60-65% market share wherever there are data points available. The modern trade, which can give us data, that is where we find that we have more than 60-65%.
But aren't competitors edging into or eating into your market share?
They've been trying for the last 5 years. They've not been able to.
So you've gained market share in the last 5 years?
Yes, of course.
How much?
Absolutely. So we would have been about 50-52%. We have definitely crossed 60% in the last 5 years. So I don't think getting market share is a problem.
Okay, time for a break now, but up next we'll get you up to date with what's happening in Russia at the FIFA World Cup on the other side. Stay tuned.